We've got a bit of a debate on our hands as to whether or not we're at the bottom of the cycle. You got Taiwan Semi and Broadcom saying yes, Texan saying not quite yet. Is there consensus there?
There isn't. It certainly is a debate. We sit on the bullish side of the debate. Texas Instruments, as you mentioned last night, talked about these corrections lasting potentially 5 or 6 quarters of declining revenue on a year-over-year basis. However, their guidance for the second quarter does imply a Q1 bottom, albeit a modest sequential growth off of that bottom. So I think the debate right now is about the magnitude and the slope of the recovery. Again, we're thinking that we are going to bounce around the bottom near term, but we are starting to hear about bookings improving, et cetera, and we're looking forward to a better second half of the year.
So, Stacy, is now a good buying time, given, if you believe Texan, that the bottom of the cycle's a couple quarters out, or is it not a good time because we know what the valuations have done so far this year?
Well, I'm leaning a little more toward the second side. Like, I don't know if we will have a second half snapback or not, but it was certainly a theme that emerged from the last quarter's earnings. I will also say that regardless of what they suggest, no semiconductor company has any real visibility into where things are going over the next few quarters. They're at the back of the supply chain. They can be optimistic if they want, but they really don't know. But when I look at the numbers across the space, there is a snapback that is already there. Numbers are decently above seasonal for Q2, Q3, and Q4 as we go into the back half. And if you look at the valuations, to your point, valuations have bounced back massively from the trough in December. I mean, they were something like a 20% discount to the S&P. Now you're closer to parity. It's actually the narrowest valuation discount to the sector that we've seen in many, many years. So whether we get a snapback or not, we might. I don't know any better than anybody else, but I think it's actually already in the numbers. And I think if we don't get a snapback, we're going to have problems.
Ruben, how much does all of this rebound and I guess this move to continued new highs for the semi sector hinge on everything that goes on with China and a potential trade deal this year?
Certainly China is very important. A lot of the companies that we follow have a lot of exposure to China and important markets there, communications infrastructure, the mobile handset market, et cetera. So we do need to see a bit of a snapback in the second half to support some of the valuations that we've seen move higher, as Stacy mentioned. I still think, though, that there are markets that are starting the early stages, like 5G. It's a market that Texas Instruments talked about last night, and there are companies that we follow that play into those markets that are still attractively valued relative to the rest of the group. So that's really where we're focused here. I'd also say that semiconductors in general, with all the consolidation that's happened in the space, et cetera, the pricing environment for semiconductors has improved, and profitability and cash flow margins have improved as well, which I think supports a re-rating for the space.
Stacy, that's another question, too, that Ruben mentions. Do you think investors are mostly trying to play the cycle as we've known the cycle historically, or are they actually getting in on secular stories like 5G, or are going to go hold these names for the next 3 to 5 years?
I think it's a little of both. I don't think even though I think you can argue the sector is less cyclical than it was, and there are reasons for that, I do not think that means it is not cyclical. And I don't think you can get away from the cyclical plays. But at the same time, I absolutely do think that there are secular themes that have emerged that investors are looking at. 5G is certainly one. And actually, if you look across the end markets right now, the one end market that is actually very, very strong is communication infrastructure on the back of those additional 5G build-outs. We'll see how long that lasts. Texas Instruments last night, gave a pretty clear indication, which is very true, that it is a very lumpy market, but for now it's strong. Investors are looking at other things, obviously, like artificial intelligence and high-performance computing, and obviously data center was a big theme last year as well. So there are certainly secular themes within the cyclical that investors are trying to play.
So, Ruben, what are the names specifically that investors should be potentially putting their money into right now?
So attractively valued stocks that we like include companies that sell into both the handset and the infrastructure, 5G infrastructure markets, which include Cuervo and Skyworks, as well as Broadcom. And then we also like Marvell Technology. It's a stock that we think is a little bit under the radar when it comes to 5G infrastructure. They did an acquisition last year, and I think as we get into broader deployment of 5G equipment, Marvell is going to emerge as a strong player into that market.
Hey, Stacy, we're going to get Tesla tonight. I wonder, are Semi-analysts, are they debating the quality of this chip that Elon Musk touted earlier in the week?
I think it was certainly some interesting claims that Elon made. And again, to his own point, he's not always on time with the promises that he makes. But yeah, I think semi-investors and semi-analysts are looking at that. Certainly they're drawing comparisons. He seemed to really sort of like throw the hammer out against NVIDIA. NVIDIA sort of snapped back with their own view on what he said. So I think people are certainly looking at it. I'll be honest, I wonder, just given the budgets of the companies that he's going up against in those markets, how true it can be that he's actually developing something that can have the capabilities in comparison to the competition that he's mentioning. I would question that, but we'll see what happens as he brings it out. To your prior question, by the way, like that you asked Ruben in terms of stocks to focus on, at least in my coverage, I just want to get that out there. I would be looking at stocks that have less aggressive estimates into the second half, because I am worried they're coupled with valuation support. I actually also like Broadcom. The other one that I would be looking at is NXP, which I do really believe is an underappreciated story. I think the numbers are very unaggressive for them, and it's one of the cheapest in the space. That is definitely one I'd be looking at.